area. So quickly, I just wanted to show you this graph, which shows the amount of inventory in each area. We track basically what's happening to the market and divide that by the total sales, and that's how we get this month supply of inventory. So just to show you, above the green represents above 6 months supply of inventory. The yellow represents between 3 and 6 months supply of inventory, and the red represents less than 3 months supply of inventory. So as you can tell, I mean, the green, you're going to have pricing pressure to the downside. Yellow, we should see stabilization of prices and maybe still a little bit of pricing pressure. And the red represents areas that are hot. They're basically, the markets are stabilized, if not starting to go up. So pretty interesting. We've seen a dramatic shift from November of 2010 to November of 2011. Moving on, wanted to show you also, as you know, real estate is a very location and price specific. So we also take this information and we break it down by price range and by area. So this represents basically a very long report, which I'm happy to send you if you want to send me an email and get this report. It shows you by area what's selling in a particular price range. So for example, we'll just go to Mercer Island, which let's just go to, let's see, we'll go to Mercer Island, which is usually a really good area to buy in. As you can see here, in the 3 to 400 range, we have only 1.6 months supply of inventory, and once you get up over 400,000, it's really a balanced market, about 4.6 months supply to 3.9 to 5.8, depending on the particular price range. If you go to West Bellevue, a little bit different story. If you get, there aren't as many homes under, say, 300 or 400,000, but the price points, there's a lot more buyers in these areas, so you've got really a balanced market up to about 800,000. Interestingly, once you get above $1 million, we're still seeing some downward pressure on pricing. 6.2 months supply in the $1 million to $1.5 million, upwards to 20 months supply in the over $5 million, 17 months supply of $2.5 to $3 million. So you can kind of get the picture on the challenges that we have at the high end. If we go to some further information on the east side, you can see that this report here shows we have about 3.7 months supply in total versus this November versus last year 5 months supply, which is down 26%. But our active total listings are down 23%. So supply is really going down compared to where we were last year, as well as our active list price, which isn't that good. Interestingly, here we have 136 days is our average days on the market for active properties versus 126 last year. And what that really talks about is the homes that are coming on the market that have been on the market, they're either overpriced or they were a bank sale or they needed a lot of work or they were in a short sale position, continue to be on the market for a long period of time. That's not to be mistaken that if the home is priced well and it's in a good area and a good price point, homes are selling. We're seeing multiple offer type of deals in certain price points in certain locations. So it's a little bit deceiving there. But I think what's encouraging is our number of closed sales are up 54% for the month over last year. So 512 sales this year in November versus 332 last year. And our number of closed sales for the year are actually up 13%. And what's great about that number is that last year we had a government tax incentive which was essentially subsidizing the market, up till April, May of last year. So that is very encouraging for our market here. And then, of course, the new report today that just came out about jobs in the Seattle area, our unemployment rate going to 8.7 months supply, which is the lowest since 2009. So a lot of encouraging things going on in real estate. I appreciate you listening. If you have any questions, please feel free to give me a call or shoot me an email. And I look forward to doing the January report. Thank you.